Hey everybody, it's Sami here with the Strategic Day Trader. I hope everybody's doing well. Hope you're having a great week so far. Today's video is about how to think when you're looking at gaps in the morning. Every morning I scan for gaps, for significant gaps only, and I pick my favorites, and I of course share the favorites um, with the room and go over them on the microphone. But I just wanted to share with you how you really need to think when you're analyzing gaps. And there is one simple question, which is the question that you have to ask yourself is how are the current stockholders, the ones that are holding the stock, in the stock, how are they feeling this morning? That's the question, okay? If you can decipher, if you can figure out how they're feeling, then that solves 50% of the problem. Then it becomes a matter of anticipating what they will do based on how they're feeling, right? Based on whether they're shocked, ecstatic, they wake up and their position is up 20% or they're down 20%. And then the other thing is, after that, if you can figure out how they're feeling, then you can probably anticipate what their action will be. And then if you can do these two things, which is, again, figure out how they're feeling, anticipate what they will do, then trading becomes a matter of finding the right entry and managing the trade. That's it, right? It becomes a matter of mechanical stuff that I can teach you in a matter of 30 minutes. Now, being able to analyze objectively how stocks, how people are thinking, that takes practice. Okay. I want to show you some top gaps today, some of the ones that I traded, but it's not just about the ones that I traded. Some I didn't even trade, like Apple. I'll talk about Apple. We'll talk about maybe Facebook in the post-market, Tesla, and we'll talk about some of the gaps from today. But first, if you're listening live, if you're watching this live, hit the like button. Be sure to hit the like button or leave a comment, say hi, so I know you've watched this, and I hope you find benefit in it. Okay, so today I saw the top was gapping down, and guess what, guys? I mean, just think about this. This stock had rallied for a whole month, right? Almost an entire month. Up, 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 based the last week plus, right? And today, stockholders woke up and the stock was down. I don't know how much it was down, like 15, 18% TUP, or maybe more. I mean, just ask yourself, how are these people feeling? All that green, all that buying, based at the highs here. Everything about it said higher. And then the next morning, devastation. Okay? Now, compare this to something like maybe Juniper, JNPR. And you'll see that the Juniper actually got bought, right? Got bought, didn't get sold. Anybody know why? Juniper got bought versus TUP got sold. And this is a great tip or trick that I use when I analyze gaps in the morning. Anybody know? Because the truth is, big gaps can sometimes also get bought simply because the stock is gapping down a lot, so it's going on discount, it can easily get bought, like the case was for Juniper. But for TUP, it wasn't, because for TUP, here's what happened. TUP was a lot more bearish, gapped under all of this, but notice that the TUP gapped right to the bottom of support, not well below it, right? Right to the bottom of support. What does that tell you? That right at the open, if the stock comes in a little bit, it's going to take everybody's stop, right? The stops are going to get hit, and which should lead to a lot more selling, which is precisely what happened. So I look for gaps, to tell you the truth, that are gapping to support, but to the bottom of support, right to the bottom. And I ask myself, is this more like a semi going through a wooden fence, or a beetle, a 1960 beetle, running into a thick brick wall? And this was more of a semi that is just about to encounter very little support. I mean, just at the bottom of support, so it cleared 90% of it. So this morning, so take a look. So it dealt with support, broke through it, and then gave us, I think, a 1, 2, 3. Check it out, 1, 2, 3. What a beauty. Totally mismanaged it because it was too spready. I hate spready stocks. That's why I don't like to trade the high price stocks, the Teslas of the world, Netflix, Apple, all of these high price stocks. I don't like to trade them because they're spready. Well, this had about 25-cent spread. It was a little jumpy. So I totally got out too soon, but ended up doing well. Ended up making $1,100, the most. Okay, but the point is, you got to ask yourself, how are people feeling, and also what is going to happen at the open once we break support in this case, versus a stock that's gapping well below support, like the Juniper. When it's well below support, can easily get bought, okay? Or when it's into support, like the 8 was. I mean, that's not at the bottom of support, that's, well above it. So it doesn't really count. I like gaps that clear 90% of support, and then right at the open, they clear the rest of it. Because then you start to get the selling. Okay? So that's my favorite type of gap, is shock gaps, gaps that shock and that gap right to the bottom of support or right above resistance. CLF was perfect, just above resistance. SYK was great. By the way, why was it good? Because we gapped over 3 red bars. People were selling it the last 3 days. So this was good, but pretty big. To tell you the truth, relative to resistance, it would have been far better if it had gapped right here, like 20 times better. But up here wasn't too bad either. SYK. Okay, it wasn't too bad. But something like the CLF is even better because it's just a small amount, which gives it, so it has a lot more energy to go. Whereas a stock like SYK was gapping already 10% or more. ADP I thought was pretty good. Small, not over 3 red bars, so the SYK had more shock value, but this is very small. CLAC was good, but CLAC was extended. The stock was actually already extended, but it was okay too. AT&T was good as a short, just under the base, right off the declining 20 on the weekly chart. Okay, now let's talk about Apple. I'm in Apple from, I don't know, from 146 something. Actually, I can show you. Apple 146.38. Okay, 146.38. Tell you the truth, I bought it at 145.80 something, but I added to it. That's why my average is 146.38. So from here, I took half already at 152.80. So in this, when it triggered the sell setup, I took half, and I'm still in half, as you saw. And today it made 13.59. Now think about Apple. Why did I hold it through earnings? Just think about it logically. Now remember, Apple already warned. So what does that tell you? The news, the negative news, is already factored in, priced into the chart. Does that make sense? Into the price of the stock, factored into the price of the stock. And the day before earnings, which was yesterday, we had a red bar. So people had low expectations for the stock. How do I know? Because they sold it. If they had high expectations, they would have bought it into earnings. Not only that, it's transitioning. Look at that curling moving average. So starting to point up, starting to curl and point up. Not only that, it had higher lows, higher highs, higher lows, you know. So it was looking good. Negative news is already out, factored into the price of the stock. The stock is transitioning, low expectations. What's not to love? Does that make sense? That's good. On the other hand, Tesla tonight reporting earnings. I shorted it, but it's not going anywhere. It's up $60 right now. It's not, meaning it's just not going anywhere because that is bearish. And we had a multi-bar run up. We didn't reach resistance or the declining 20 or this is the flat 200. So it would have been far better up there. But that's why I shorted it into earnings. But it's not going anywhere. Now, Facebook, if you were, I do also coaching for the strategic day trader members after the close on Tuesdays. If you were in that session, what did I say about Facebook yesterday? Somebody asked me. I said that's a long, but it printed a green bar. I don't play something long into earnings if it prints a big green bar because it means the expectations are high. Does that make sense? So I would have played it long if it finished as a red bar today into a rising 20. I would have considered playing it long. So that's what I said in the coaching session yesterday. That this is a long. It's gapping up 16% after the close. So I hope, I wonder if there's any questions. I just wanted to share with you how you have to think. You have to put yourself in the current stockholders' shoes. You have to find out how they're feeling in the morning, and then anticipate what they will do, and then it becomes a matter of finding an entry, stop, target, and management. Of course, you have to manage it correctly. All right, so what did I do today? I'm going to show you one other trade, which was the MIK, my second best trade. But I just want to show you this, okay? Real quick. Think about this. I just want to show you the Qs, the market, at, I think on the 5-minute chart, right here. Look at this, guys. Up, 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 up. Biggest volume, top and tail. So we should start to come in a little bit. Does that make sense? Should start to come in. That's the market. We didn't really come in much, but a little bit. But the point is up, 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 right? And at the highs, what time was that? Like 12:25 or so. Check it out. What was the MIK doing at 12:25? 12. I should have just stayed on the 5-minute chart. Check it out. The 12:25 at the low of the day. See this? At the low of the day. What does that tell you? Relative weakness. Relative weakness. Not just relative weakness, extreme relative weakness. The best relative weakness you can have is when the market is at the highs and is looking to come in a little bit, extended, climactic perhaps, and your stock is basing at the lows. Unfortunately, this wasn't basing. It was just dropping. So I couldn't really hang on to it. I just basically scalped it for 10, 20 minutes, and then I got out. I got out in this bar, okay? And it later on continued lower. And check it out here. What time was this? 1:30. Let me show you the Qs at that time. 1:30. This would have been a good short, actually. At 1:30. Look at this. 1:30. Or was it here? Yeah, 120, 1:30 started to break down from the highs. MIK was at the lows. So that's how you have to think. Of course, FOMC later on, market popped. What did I say on the mic in the strategic day trader room today? If we base sideways into FOMC because the market is bullish, we should pop, right? Didn't I say that? Same exact thing that I said. If we base, we should pop. Because when the market is bullish, no matter what the Fed does, almost, and as long as you don't get a run up into the Fed announcement, as long as you don't get a big run up into it, in this case, that's why I said if we base, then we should pop. And we have a bullish market right now, then you should, the market is going to go with the Fed. I'm sorry, the market is going to go with, the market is just going to do what the market does, which is in bullish markets, good news or bad news is viewed as good news, as bullish news. Does that make sense? So that's why the market popped and stayed really bullish. I think that's all I wanted to cover. I hope you enjoyed today's video and found benefit in it. And Tesla's starting to come in, I guess. And I'll talk to you later, but I just want to show you. I tried to short some more. I'm in just 25 shares. But look, I know I'm not trading huge size here, but I show you. I see on YouTube all kinds of traders out there saying they're in Apple or they don't show you anything, right? There's reason for it because they're not in it. So that's the difference. I tried to short Tesla at 316.68. My order might still actually be out there, but I didn't get filled. In the post market, I don't really trade the post market. I don't trade the post market, uh, rarely, if ever, at all. But today I decided on Tesla that it was good at 3. I didn't get filled. Somebody in the room got it at 315, but I didn't get filled. To add more to it, I mean, because I only have $7,500 worth of shares, which is 25 shares of Tesla. Now, don't forget, I'm holding it into earnings, so that's why it's small size. If it was a regular trade, would have been bigger. At any rate, I again hope you enjoyed today's video, and I will talk to you later. Check out the links in the description if you want to check out the room, if you want to trade with me. If you want to swing trade with me, then there's the swing trading newsletter, the strategic swing trader. That's where I call the swings, right? Like Tesla was called actually a short as an official play tonight. And then I also posted the link for advanced gap strategies, which is the course that you would need to take to learn about gaps trading. Now, we talked about it for a few minutes here, but there's a lot more to it. There are exact things that you need to learn, specific things that you need to learn. All right, everybody, enjoy. I hope you enjoyed the video. We'll talk to you soon. Take care. Good luck.